Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, January 14th, 2009. Well, as we get into today's intraday activity, and I really want to focus on learning today the educational side of looking at the pattern, pricing, and timing of the charts, what I want to talk a little bit about first is what the market's doing right now. Right now, we see the Dow down about 210 points, the NASDAQ down about 43, the S&P down about 25. Across the board, it's about 2.5 to 3% sell-off in the markets. However, it's far better than where it was not long ago. Now, folks, we've seen a little bit of this whipsaw Wednesday we talk about. Now, not necessarily on the upside, but just from being drastically down a huge amount to being down a little less and a little more, a little less, and so forth, just back and forth. And you can see from the seeing really lately over the last couple minutes, the market's actually had a big rally up, and then you've actually seen a little bit of a pull down. All right. Now, I'm going to bring up the futures chart, and we can take a look at that quickly. But I really want to focus in on these moves because you can see here now the moves are really starting. This is the futures chart, looking at the ESH9 March 09 E-mini S&P 500 chart. And what you're seeing here is the market really selling off all morning right into that lunch hour, then starting to get a little whippy. And this is what we talk about when we talk about Whipsaw Wednesday. You talk about the Options X Wednesday prior to that Friday when options expire, getting very volatile and having big moves as they try to flush out the longs and shorts in these call and put options. And that's just the big boys doing what they got to do. You got to understand, they don't want to pay off a lot of these puts and calls, and therefore they're going to make sure they do what they have to do to get everyone to try and get out of them, or obviously have as many as possible expire on Friday worthless. So here we are. We can see that the market really just continued to sell off, ultimately making a few bottoming tails down here. Now, this was a good indicator that you could see a move up in the markets. Now, why? Well, number one, see the tails? The majority of these candles all have tails. 1, 2, 3 of the 4 candles here have tails. What that's telling you is that the market's selling lower and ultimately rallying back up. Okay, so people are, or the market's pushing, or sellers are selling down to here, but then buyers are stepping up and saying, you know what, this market's too cheap, let's buy, and it's pushing up the candle. So when you see that happening on multiple candles, first of all, this is a beautiful bottoming tail right here, which is an indicator in and of itself, but even these right here are telling you you're getting near that point. Okay, now ideally what you want to see is you want to see a bottoming tail and then a confirmation candle breaking the high of that candle or closing above, and then you obviously get the go-ahead if you want to take the lower risk play. All right, off a sell-off like this. Sure enough, it did that right there. You had a nice up move towards the 20 moving average of resistance, then a pullback, but notice how you had a higher low here. Higher low being key. You rallied up again, and you actually made a higher high. Note the higher high, and I'll draw this across. So you actually took out that high, really the same resistance point, but you actually went higher. Then again you pulled back, but you didn't take out the low. So here's the low on that chart. You really made a double bottom down there again, but double bottoms usually happen at the lows. But in any case, in spirit of double bottom, it did not even take out the low, which is a bullish signal as well. And then the market really started to rip up over the last hour. Now look at where did it go? Where did this market go? First of all, you knew on this next rip up, if you take out this high, chances are you're going right to that moving average. Where did you go? Right to the 50 moving average on the upside. And now what do you get? Obviously, if you're a shorting person or a short opportunity specialist here, you're looking for a short opportunity off that pullback. And sure enough, you're getting that pullback right now in the markets. So this is just kind of analyzing the charts, guys, and understanding everything about them, how to handle them, how to trade them, and so forth. But really, this is what it's all about. Okay, let's go to the SPY. I want to flip out to the 60-minute chart. Here's the SPY intraday, by the way. And the intraday I had shown you before. You had that nice sell-off here, gap down. Notice the gap down, all right? And then the sell-off, then the rally. And again, you had the bottoming tails coming to fruition right here. The sell-off, the rally, sell-off, double bottom right there, or support right here. Notice the big major point of support right here, guys. The lows of all these candles are all matching up to this line, so you know this is a major support line. So should we sell off here and come back in, then you'd look for a major support line here, and at the 20 moving average should be a minor support line right here. All right, both of them should be okay as supports. On the upside on the SPY, watch this 50 moving average. If this gets tagged, it's a first hit of the 50. It should be shorted, or at least the highest percentage play would be to short that, unless you get a major volatility spike on options expiration week here. But in any case, that's the way you'd want to play it as a technical trader. And obviously, you'd be right more than not, as you've seen in these previous intraday videos. All the moves we talk about almost do exactly what we say, and we choreograph it going forward as well as going back. Okay, 60-minute chart, folks. Number one, here's the 60-minute chart. Let's move it into view. So this is what we saw. We've seen that big up move we had. Then it's just been constant selling, folks, completing the symmetric move in the market where we were all the way down over here. Let me show you that. All the way down over here. We had the big move up, and then really the big move down all the way down here. Alright? Now we came into that support line right around here. We broke lower on the 60-minute, believe it or not. This is somewhat of a bearish channel. Now, it doesn't mean it's necessarily bearish. And now, why would I say that? Because right down here you were at support. Now, I'm going to expand the chart to 180 so we can actually see it even better. I want to talk a little bit more about supports. And you can't see it on this smaller screen, but I don't have an option. So what I'm going to do now is actually expand it a little more so we can see the 180. So let me do that right now. Flip it to the 180-minute chart, where each candle is 180 minutes. And then we can start talking a little bit more about where we are. First of all, notice this key support right here down here, guys. You guys know this is a major support line. Why? Because look at where it's come down to. It's multiple hits of this general area. So first of all, you want to take that, draw it across. Where does that come to? All right, number one, you had a close above and a gap down below. This happened over here as well. We drew this support line in right over here. And we said, watch for this level to be support. On this day when we were up here, we said, watch for this to be support. You gapped below it. Once you gap below it, if you can't recapture that, that's a sell signal. What happens here? You gap below this support, and what is it? A sell signal, and down we go on this candle, on this 180-minute candle. Now we've had a nice little bounce. We've had a very, very strong bounce off the lows, but we want to be careful here because, as I showed on the 60-minute, it was a little bearish of a candle going into the end of the day. Now, again, remember, options expiration week, they can whip it up and down every which way, so just be very cautious. But note, this is very good resistance now on the upside, and you're going to have to recapture that. All right, going all the way back to over here, it's very, very good support. Now you've traded lower, so really what we're going to have to do is go out even further, and what I'm going to do is go to the 300, we'll go to the 240. The 240 should be able to show us here. Hang on one second, 240, because I really want to find out the support lines on this chart. And that'll help us do that with this chart. Good, excellent. So we can erase that one now. So now we're looking at each candle here is 240 minutes. And the reason, again, I have to do this is because you have to watch to be able to, analyze this in the correct way. Now, if we draw this line all the way across, you can see we're finally coming into a little bit of support here. Ultimately, this next support line could be as low as here, though. So just be aware of that. Is that ultimately you could be going down to that 82 level on an intraday basis over the next few days. But again, I happen to think that we're getting very, very close to a bouncing opportunity here as things have gone down. The Dow's down 6 straight days. We basically dropped about 900, 800 points, I believe, in those days. Just a pretty ugly sell-off, and we're due for a bounce. You're getting to that level where things are oversold. But just speaking on a support and resistance line, you can see the lows, the closing lows of this candle right in here are matching up to the lows over here on this candle. So that's beginning to tell me there's a little bit of support here. If we were to take that out, then ultimately you're going to start to look for this level right here. Would be some S1 after that. And then ultimately this bottom level will be S2 at 82 on the SPY. Alright, so keep in mind those levels. The next thing I want to touch on is the oil chart. Oil chart intraday, the USO. Huge move up here, guys. And I told you yesterday in the intraday video that I was very close yesterday to buying oil when it was down to $30 on the USO, and if it had just broken 30, I would have grabbed it and ridden it up. Well, today what happens? It comes down again to $29.96, and look at that. This is $29.96, so a break of 30 again, and look at where it closed the day. Huge move up off the lows back to $31.19 right now on the USO. I unfortunately was not quick enough. It was about a split second that it went down there below 30, and I did not quite get it. But nonetheless, this right around this 30 level is acting as very solid support on this USO. I'm still going to wait and try to be a little patient on this oil trade, as I think, into the end of Options X, it could be an interesting play. But nonetheless, great play there on that as it broke down and then finally rallied. And notice this, guys, just doing a little chart analysis with you guys. All right, what do we have here? All right, let me just do this and look at it this way. All right, you have a move up. What type of flag pattern is this off of this move up? It's an in spirit of bull flag, right? Sure enough, what happens? It comes to fruition. Those bull flags, in spirit of bull flags, are very powerful. You have to know them. Also, notice how it's banging on the 20 moving average here. That's telling you that 20 is getting weaker and weaker, more likely to break up. Sure enough, it does it. Alright, folks, that's enough for today's intraday video. Join the Research Center to get the videos every night among a lot of other things. Take care.